Bismillahirrahmanirrahim. Assalamu alaikum. Welcome to Mastering Accounting Skills. Today our topic is cash flow forecasting. Cash flow forecasting is actually a process to estimate cash in and out of a business over a specific period of time. Normally, businesses use a 12-month period of time to forecast their cash flow. This report enables businesses to have an accurate information of what their cash position looks like in future. Let's have a look of a cash flow forecast report to see what information this report can provide us. After that, we will see how to prepare this cash flow forecasting report. So guys, this is in front of us one cash flow forecast report for a period of 12 months starting from Jan 2016 till December 2016. So what it is reporting to us, at the starting point we have the opening balance of our bank, then we have collections from our customer, then we have payment to the suppliers. Okay, after deducting these payments, we have listed here all the cash expenses, what we need to make payment during the month of Jan. And finally, at the bottom we have the closing balance of our bank on 31st Jan. So this closing balance will be the opening balance of our of the month of Feb, and also then again same process, it will continue the collections from the customers, payment to the suppliers, then all the cash expenses are listed here. Then finally we will get the closing balance for the month of Feb, and it will continue to March as a opening, and this process will continue till the end of the year. So as you can see, this report is very helpful for the business managers, as it will help them to plan for the future, to assess their future performance, and also it will help in predicting the future goals accomplishments. If the organization has any future goals to expand the business, to buy new equipments or plant, then they can see in which month they have excess cash to invest further in the business. And also this report will help in identifying the cash shortages. If in this report, in any of the coming month, or May or June or July, you can see that your cash is going negative. So before the time comes, the manager can take necessary action to avoid this cash shortages in future. Let's now do some practical, and we will see that how we can prepare this cash flow forecast report. So what data is required for this? First of all, the receipts we need. In the receipt side, the first thing we need is bank opening balance as on last closing period. The second thing on the receipt side, is there any owner's equity plan or the bank loan? Business has any plan to take any bank loan or owner's equity? Then on third, we need customers accounts receivables. Okay, how much the accounts receivable, and in which month how much we are expecting to receive. So this we need to do, and then at fourth we have PDCs from customers. Then payments side, we need suppliers. Okay, suppliers balances, then PDCs to suppliers, what we have issued post-dated checks to the suppliers, what are the dates of the checks, what are the amounts of these checks. So this data we need. Then monthly cash expenses and accrued expenses, and then loan repayments or taxes, etc. Okay, so these things we need to prepare our cash flow forecast report. Now what is the source of this data, from where we will get all of this data to make this cash flow forecasting report? So the main source is the trial balance for the year to date December 2015. Okay, so we are going to forecast for year 2016, Jan 2016 till 31st December 2016. So the main source is this our trial balance. So in our trial balance, bank balance we can get from here. Okay, here we have these two bank accounts and this cash. So total of this 203,433. This is our opening balance for cash flow forecast statement. Then accounts receivable balance we have here. Okay, this much. Then PDCs from the customers we have here 1696. Okay, And after that we have anything for the suppliers balances also we have here. Accounts payable, this is accounts payable. Okay, so this is our supplier balance we have in the trial balance. Then PDCs issued to the supplier on December 2015, this is 3.1 million. Then accrued expenses also we have here, accrued salaries and all accrued expenses. And regarding the cash expenses, from where we will get, so this is from this we can get from the our P&L budget. Okay, if you did not see, this is our profit and loss budget for the year 2016. Okay, this much we will sell and these are our expenses. So all of these are our cash expenses. Okay, rent, salaries, okay, government fees, transportation, utilities, all these are our cash expenses. So this cash expenses we can get from here. Okay, receivables we have in trial balance, bank balance we have there, PDCs from customer we have there, and for supplier balances also there. So this is the main source of our data, P&L budget and the trial balance. So these two are the main sources. But in the trial balance you will get the total figure. So we need to forecast the suppliers payments. So for that we need each accounts payable complete detail. Okay, that what is the supplier name, how much amount we need to give him. So like this, for each supplier we need the details. If you check this, it 197,000, so it should match with our trial balance figure. Let's come to the trial balance. So if you come here, so see, same amount 897,634, we have the list of the suppliers. Similarly, the for the customers, or first check with PDCs to the suppliers. So PDCs issued, how much we have here, PDCs issued, this is, so this file we have 3.17 million we have PDCs issued. So it is the detail of the PDCs. Okay, what is the check number and the check maturity date and the check issue date and the supplier name and forward, and this is the amount. Okay, so here we have month wise all the checks. Okay, for the Jan, how much checks we have, this orange one is, this is all these checks are for the Jan. So total of these checks we will pay in Jan. And similarly for February we have the checks for the suppliers we issued already in advance. These checks we have issued for February. Okay, then down March will start, April. So all the PDCs we have complete list that in each month how much to each supplier we need to make payment. Okay, we have already issued these checks. And the this supplier balance AP means this checks not issued, and that is we have already issued the checks. PDCs issued in advance to the suppliers. Then for the customers, accounts receivable balance we have here, how much, 4.3 million. This is accounts receivable, but what is the detail of this? So this you can see here, we have AR sheet. So here we have complete aging report for each customer. Okay, how much we need, we have balance for each customer. So this is the detail. If you see the total 4.37 million here also coming, and if you want to match it with the trial balance, same figure 4.374. So these things you need to reconcile before making your cash flow forecast. You need to reconcile these things. And then we have customers PDCs, post dated checks from the customers, 1.696 million. So what is the detail of these PDCs? So this also we should have, we have here PDCs received from the customers. So this is the detail of all the checks month wise. Okay, in Jan how much we will receive from the customers. So all these date wise, the check date is there, amount is there, and the customer name is there. So this is the receiving date and this is the check date. Okay, so if you see the total of this, it is 1.696 million. Okay, how much in the trial balance is coming? 1.696 million. So same amount. So it means this is also reconciled. So we have the details of AR, we have the details of checks from the customers, we have the details of supplier balances, and also we have the details of the PTC checks from issued to the suppliers. So all these we matching with the trial balance, we have the details. Okay, so the point to be noted is in this cash flow forecast process, the main work what we need to do is we need to forecast that how much we will receive from our customer in each month, and how much we will make payment to our supplier in each month. So this is the main work what we need to do to finish this forecast. Other all things are very simple. This cash expenses we can easily get from the P&L budget file. Okay, this P&L budget, how we are making budget. For this I have already make one video on profit and loss budgeting, so from there you can see if you need help to how to create the profit and loss budget, so this you can take help from that video. So this cash expenses easily we can get from here, and the accrued expenses also here in the cash flow forecast, and the dividend payments. So this is total of the dividends 127601. So this is also you can get from the trial balance how much dividend payment is there. As you can see here, see this is dividend. So the dividend payment 127601, this is the payment, and this we have forecasted that in each month we will make the payment. What is the dividend forecast? Dividend payment forecast we have here, that for the each partner of the company we will give this much amount in Jan, this much in Feb, and so this we can get it here, get from here. So this is from your management comments. You can make these forecasts that how in each month how much you will pay and to who you will pay. So okay, so everything is very simple. Cash expenses you can get from the P&L budget, but the main thing for the customers collections and for the supplier payments, this you need to do some work. So we will see how we will get these figures. First of all, we will see how to forecast the payments from the customers. Then we will see this for the supplier payment forecast. So AR forecast, this is our AR forecast working sheet. We have the aging report. Okay, one by one we will go for to each customer. We will see review the payment terms with this customer, and then we will forecast. Okay, this April payment we will receive from him in Jan, and this May payment we will receive in Feb, and this payment June we will receive in March. Similarly, so as per our payment terms with the customer, we will forecast the payments for each customer, that in each month how much we will receive. For this we can review customer statement, and also we can get this information if we have any report coming from the system for the payment terms, 30 days, 60 days, 90 days, whatever the payment terms with the customer. So accordingly we will forecast this. Okay, so one by one for each customer you need to do this forecast. December 2015 I will receive from this customer like this. Okay, so if we have the same payment terms with all the customers, so we will simply copy this. If there is different, then one by one we need to review each customer. Okay, so it will not take too much time depending upon your customer and the payment terms. So like this you will forecast that I will receive from all my customers this 4.37 million. This is the balance of your AR in the trial balance, and this you will receive like this. Okay, so this is the one thing. So after finishing all this task, then we will see that okay, 4.37 million was total our AR balance, and 4.37 million same amount we have forecasted, okay, that in Jan, Feb, March, each month we will receive like this amounts. Then we have PDCs from the customers, okay. What we will do, we will export our PDCs from customers file here for Zachmarts, the company name, okay. So these are all the PDCs from the customers, okay. These are some checks we did not present in December 2015, still we have to deposit, we will deposit this in Jan. So this month wise we have all the check details from the customers, okay. So what we will do here in this sheet 1 for the AR forecast, we will come here that in Jan how much we will receive from the customer, just we will total from here, okay, from here till the end of Jan. So this is February start, this is the last check for the Jan we have from our customer, okay. Till here when we total, so it will be not like this, there is some mistake, let us check it again. PTCs from customer, yeah, this is the last check. So 490,000 we have checks from our customer, then 484 we have in Feb, this is 353,000 in March. So like this total PTC as per our trial balance, we will forecast that we have the checks like this from our customers. So then finally AR forecast, okay, this green one, then this purple one plus the PTC. So AR forecast plus PTC we have this much, this amount plus this amount, 810604, okay. So like this we will total. So this is the AR plus PTC forecast for our collections. After that, in next step for the collections forecast from the customers, this figure we will copy, okay, Control C, and we will come in this cash flow forecast working sheet, and here in this sheet we will paste this, paste special, okay, values. So this 6070, okay. So this is the summary that AR we have this much in our trial balance. So this is linked with the trial balance sheet, okay. Here is the trial balance sheet. This you can see that we have 4374 plus 1696 6070 695 6 million, okay. So same in our collection sheet we have this much. So in forecasting customer payments, we have forecasted what we have the receivable balance from the customers and what we have PDCs from the customers. So this is the one 6070. Let's make this big. So as you can see, this is the one. Now you will receive from your customer also for the sales what you will make in Jan. So that also you need to forecast that how much you will receive. So for that you need to do the working, that how go to the previous month, that how you have collected from your customer. So what you have sell in November, make November as an example and make this table, okay, that or in 30 days how much of your customer paid. I make this working. So 10% of my customers are paying 30 days, after 30 days 10% after 60 days, then again 10% are paying me 90 days payment, 30% are paying me 120 days payment, and 25% of my customer are paying me 150 days payment, and 10% like this, okay. So what we will sell in Jan, what we will sell in Feb. From this also we will receive from our customers, okay, as per the previous payment history. So in Jan, this figures for the net sales value, from where it is coming? It is coming from the P&L budget, okay. All these figures, 10,700,000. So this is our sales. So this 10,700,000 we have here, okay. So this also, from these sales also we will get some payments. So as per this table, I will make the formula here, that this 900,000 sales what I have forecasted, okay, from this I will receive from my customer in the 30 days I will receive 10%, right? Then in 60 days how much I will receive? This is the number of days, 60 days, again 10%. Then in 90 days again. So I have applied this formula there. So this only one time you need to do this working, and then you will just put the sales here, and it will calculate for you. Like I will make here, if I will make here 1 million sales, so all these figures will change. See, all this is changing. So one time you need to do this working. After that, each month, just when you are going to make refresh the forecast, so we will you will just come here and put the sales for the each month, and then it will come here. So like this you will forecast your sales as per this last customer's payment history, okay, that how you are receiving from your customer. So this for the future sales also you will forecast here. So we have forecasted our AR balance in trial balance and the PDCs from the customer in trial balance. This is okay. Then what we will sell in the future months, this also we will forecast, that in each month what we are selling, how much we will receive from our customers. So all this, when we will make the total of this, okay, AR plus the forecast for the next coming month sales, so it will come this figure. So this figure you will copy and you will take this figure to your trial balance. See, come to the cash flow budgeting file and here make paste special values. So this is your AR forecast. Then second thing, my brothers and sisters, is the AP forecast. So AP also, as per the trial balance, we have this much balance for each supplier. We need to review each supplier account and check the payment history, and then you will apply the that how much you will pay from this 346,000 in Jan, in Feb, in March and April. So I do this working already. So you will go, what you will do, just go to the each supplier ledger and check the payment history, that how much payment, how many days you are taking to make the payment. So then as accordingly you will issue, you will write here the amounts, that from this 346 126,000 I said I will pay in April, and the remaining balance I will pay in May. Similarly for the second supplier I have forecast like this, for the third supplier also like this, that this much payment in April, this much in May. Then for this LC traders I will pay them this balance in May and June. And for Alberta Technologies I forecasted that in June I will pay, and July and August I will finish their balance. And this Amazon Technologies, this is on Feb I will pay this much, and March this much, and Comsets. So like this for each supplier you will go and make the forecast, that how much you will pay to this supplier as per the payment history. Accordingly you will make it. Then you have this is the forecast, this total forecast when you make it. So you will match this figure, that's 897 of is coming for the total forecast, and 897 same we have in our trial balance. Okay, so this you have forecasted. Then PDCs issued to the suppliers. So here we have the table for PDCs issued with the check maturity date, check issue date, for the supplier name and the amount. So from here you will get the figure that okay, in Jan I will pay this much checks, and in Feb I have issued this much checks, and in March this much. So total of this, again it should match with your trial balance figure 3.1 million. And then here you will make the total of this AP forecast plus the PDCs issued. So this will be the total for AP forecast plus the PDCs issued. Here you will apply the formula, copy this, and then again go to the cash flow forecast sheet. Here in the collections sheet, AR forecast already we have discussed. Now the AP forecast. So here you will paste this figure as values. Okay, for 4 million you have forecasted that in Jan, Feb, March. Then again for the sales what you are making in Jan, definitely to make this sales you will purchase new item from the market. Okay, so your cost of sales is coming like this. For the your purchase is forecasted for Jan, Feb, March like this, to sell this much. Okay, then this purchase also you will issue some checks. Okay, for the new purchase. This till now you did not issue. This this yellow highlighted you can see from the balance sheet PDC plus the AP balance. Okay, but what you will buy new one in Jan, Feb, March in each month, that also you will issue the new checks. So this checks also you need to forecast. You will go and review the payment history for the last month, and you will see that 40% of my customers I have make the payment in 5 months, and 60% of my customers I have make the payment in 6 months. Okay, so accordingly you will apply the formula here, that this purchase 774,000 I will pay in May and in June 774,000. Then this purchase for Feb, okay, 817,000, this you will pay in June and July. Okay, so like this you will make your forecast that okay, these whatever new purchase I will make during the months, that also I will issue the checks in future. So like this, when you do all this process, then you will make here the formula total. Okay, then this all total you will copy and bring to your cash flow budget sheet. Here you will make paste special values. Okay, okay, so this is the main portion what you need to do. These expenses already I told you. Here you can see the salary is not coming. Why? What is the reason here salary is not coming, and in Feb you are making salaries payment? Because this salaries we have already made the accrual in December closing. So this accrual expenses we are making payment here. If you see the accrued expenses, so this it is coming from the trial balance. Okay, so from the trial balance accrued expenses you can see this is your accrued salaries plus the accrued expenses. It is coming 69,000. So this in our cash flow forecast we forecast that this salaries we will pay. That's why I have removed this from here, because it is already we make the accrual in December. Okay, December salaries we will pay in Jan, so it is already here, and the Jan salaries we will pay in Feb, and the Feb salary we will pay in March. So like this cash flow is going. And secondly, this dividend payments also, I show you that we make the forecast after discussing with our manager that okay, these are the partners, and each month we will give this as per our trial balance 127,000. Like this we will issue the checks in each month. So this also we have forecasted here. So like this we will finalize our cash flow forecasting. Okay, we have the balance in our bank, opening balance as per the trial balance, plus the collections from the customers, minus the payment to the suppliers, minus all the cash expenses in each month. So it will give us that this much balance for the each month we will have in our accounts. Thank you for watching this video. I hope the knowledge we have discussed in this video will add value to your professional skills. If you have any question, you can ask me in the comment box. I will reply you. Thank you and stay connected.